welcome to our webinar today. And I'd like to introduce our two speakers that we have today. So we are joined by Cole Spencer, who is broker and advisor at Founders Shield. And Founders Shield and Blumira are partners. And we're also joined by Matt Warner, who is co-founder and chief technology officer at Blumira. And without further ado, I'm just going to hand it on over to you and let you take it away.
Thank you, Kim. Thank you, everyone, for being here. I'll give Cole a chance here to introduce himself as well. But I just wanted to say thank you again for everyone spending some time with us. And as Kim said, throw in your questions. We're excited to see what everyone's thinking about. But here, Cole, why don't you introduce yourself to the people, as it were, and we'll go from there.
Sounds great. Thanks so much, Matt. Yeah, thanks again, everybody, for joining. I'm looking forward to diving into the riveting world of cybersecurity and insurance today. So looking forward to seeing what questions you guys have for us as well. Like Matt said as well, I'm joining from Founders Shield, one of the brokers, advisors on our client advisory team. Essentially, the role is here at Founders Shield is just to kind of guide founders in our portfolio on holistic risk management practices, whether it's from seed all the way up to exit stage, whatever that looks like, whatever stage of your journey you're at. And so that being said, after today, obviously Matt and I always have open office hours for anybody else that wants to continue after the session.
Yes, very much so. And we're excited to hear more about how we can make cyber insurance work all better for all of us, because it's a fun and interesting thing that we continue to go through, especially with all the new types of insurance coming down the lane, which we can all thank things like CrowdStrike for, like the downtime insurance and things like that.
We'll definitely be hitting on that one today. That's for sure.
I bet. Yeah, we'll definitely talk about that. And I am Matt Warner. I'm the co-founder and CTO of Blumira. If you've watched these before, you've seen me. If you have not, I'm the founder of Blumira. I'm the guy who started this craziness. And we here at Blumira focus entirely on how to deliver security in a way that it drives outcomes and makes you someone who actually enjoys what you're doing. And that's really kind of our big focus as an organization. So today we're going to talk about kind of a few different chunks, although they aren't going to be like chunked out in sections. Think of this as more of like a general theory as to what we'll be talking about today. So we're going to talk about kind of where you are in regard to what we see, at least in regard to cybersecurity efforts across the industry, what kind of steps can be taken, especially as you start moving into how we're going about cyber insurance associated with it, but really kind of in that path as an organization. And lastly, especially from the standpoint of Founders Shield, what is that risk management? How do you get into insurance coverage? And what are your insurance coverage options? Because it's an interesting and continues every week at this point to change and grow on the cyber insurance side. And before we jump into that, I'd be interested, Cole, from your perspective, before I jump into talking about a bunch of security stuff, kind of how do you look at, on the Founders Shield perspective, when you're looking at talking to a customer and you're talking about their vendors that they use on the security side, kind of what kind of stuff do you look for in that company that you're looking for the vendor to kind of offset and really, make what you're doing on your side, the cyber insurance side, make sense?
I think it's a great question because generally speaking, a lot of the founding teams we work with, whether it's at an early stage or even a kind of scale up growth stage, oftentimes have like a million things on their plate at once. Kind of like Kim said a moment ago, everyone's task lists are kind of just running off the edge of the page. And so while they're working to, whether it's juggling fundraising, building out their team, carving out a market fit for whatever their brand might be, things like maintenance and upkeep on a sufficient and updated cybersecurity infrastructure can kind of oftentimes fall to the wayside. So especially when it's, a smaller founding team and someone just becomes kind of a catch-all for roles like everything from finance, insurance, accounting, and then paying vendors, cybersecurity, subscriptions, things like that. So, and that's really when it comes in just incredibly crucial to have a partner like Blumira to obviously offer support on that front.
Gotcha. That makes a lot of sense. Yeah, it is especially for founding and when you're early, the amount of hats you wear is a unique type of problem. So yeah, definitely good to always come up with ways to make life easier when you can do that. So kind of how we being Blumira look at the market is really more from the standpoint of where the most help is needed. And a lot of this is in the small, medium businesses, small enterprise, and really coming up with ways to help solve those problems in a way that can actually be leveraged and driving to outcome rather than just having some solutions that are there. Over the last 10, 20 years in the world of cybersecurity, the needs in SMB and small enterprise have only grown, but the technology has not really necessarily grown with them, or at least grown in the direction that would be most helpful. And as we look across these teams, I'm sure from a risk perspective, y'all talk about this as well. Like we are seeing teams that are essentially continuously being pushed to need more time available. When you look across the compliance regimes that are being put out there, things like 72-hour breach notification or material breach notification or having fully documented structured IR plans when you have one or two IT people is a bit of a challenge for most people.
It's a heavy lift, especially when in the meantime, when something actually does hit the fan, you're not really thinking about documenting everything all at once. So it's good to have, especially that support there 24/7.
Very much so. And in most cases, sadly, although the reality of the world, most of us aren't going to get 10 times more budget on IT and security all of a sudden. We're like, now we can solve everything. It's if only it would go that way. But sadly, usually it's more of a here's another hat, take another hat to wear, and we'll figure it out as we move forward. And of course, just broadly across the industry, we see less organizations running your 24/7 teams, which I think is great from a mental health perspective. It's spectacular. We can have less people running 24/7 teams. But then you add in this kind of new problem of, well, who does the work at night? How do I make sure I get enough sleep at night is really kind of the thing we hear. And there's, of course, ways in automation and kind of how to solve those problems. But you get these additional kind of complexities of who's going to do the work? How do they make sure that things are right? How do we make sure it all fits together? And of course, lastly, it's all just complex. Nothing is straightforward. And I'd be interested, Cole, on your side. How do you look at that kind of like stacked up complexity in the world of all the technology that your customers are using and how that overlaps with cyber insurance?
Well, it's another one of those things that, like you said, is kind of constantly evolving. In that every time we sit down with underwriters, whether it's quarterly, monthly, or on a risk to risk basis, and it seems like they have, like you said, a whole new slew of requirements or a whole new addendum or supplemental application that they need filled out to try and have the clients make sure all of these new, whether it's regulatory, boxes being checked or something, something along the lines of just peace of mind for the underwriters. They want to make sure that everyone is as buttoned up as possible. And it's one of those things where the last thing you want to be doing, especially during a marketing effort or just trying to assemble an insurance program, is being worried about 12 different carriers and each of their very specific requests or their niche requirements just to get some level of coverage in place. And so it's definitely a juggling act.
Yeah, one day everything will be easy. I don't know when that day will be, but one day it's destined to happen. I'm sure of it. So let's take a look back at kind of the last years of what Blumira has seen, and I like to talk about this, especially from the standpoint of like what does cyber insurance want to see you bring to bear? That's a question that we get a lot of, like, do I need a SIM? Do I really need to collect data? What's really important when I have this environment? Like, what is the most important thing to protect? And I like to pull this up, and this is just a list of our top 10 threats. This doesn't go deeper into our environment because it's such a varied list out of the environment over the last year, ranging from, Sophos blocking websites that are like true bad websites that your users are going to people storing clear text password documents. I'm sure a lot of us go through this, especially if you're just starting or you just have marketing and sales teams, no offense to marketing and sales teams, that are storing, Excel files with passwords in them, which classically is totally understandable, but it increases this risk, it increases this danger, and it's something that we continuously see as an organization where, there's a need for more remote work, so Screen Connect gets used more. There's a need for people to think that they need a way to manage passwords. Maybe they haven't been trained how to manage passwords yet. Maybe your cyber insurance hasn't required you to use a password manager yet. So you're still leveraging these kind of clear text passwords. You're storing them in your Google environments, locally in your environment as well. And generally speaking, what we see is that it's important to just get more data into your environment if you're using Blumira, if you're not, doesn't really matter. For whatever SIM you're using, ensuring that you can get that level of visibility broadly across your environment to reduce that risk, because any risk reduction is going to help your cyber insurance in the grand scheme of it all, right? And Cole, on your side, is there anything that you all look for from a vendor perspective when you're thinking like, we would like to ensure that you see these things? Like, is there anything that from the people watching's perspective that they can maybe not take away from this or like the data that we're seeing come in, but rather from your perspective, how should they think that how you're thinking about this?
So, I mean, and in having been an underwriter in a prior role as well, I can definitely say, putting that hat back on, they want to know that, on a minute to minute basis or whatever it might be, that a client does have, or an insured on, in their book of business does have as much visibility, like you said, into their ecosystem as possible. And another thing that a lot of cyber insurers have also started rolling out is their own, and their very, I'll call them basic, but like network facing scanning tools and things like that, so that they can offer these reports and these benefits as well themselves. Because I think, that's something they've wanted to see, vendors provide as well, which obviously is, kind of having a partner again like Blumira who already is doing that. It's just going to already increase your, kind of cybersecurity stature and your underwriter favorability when it comes to either renewing your current coverage or going out to look for coverage right off the bat, to then obviously, hopefully safeguard yourself from ever having to then need to use that cyber insurance.
Yeah, that's interesting. Does that tend to come across then from your perspective of cyber insurers that are adding that external is just kind of an unnecessary value add that probably should be
That's all
driven
they're
through
trying
your
to do.
security? Okay, gotcha. That makes
Exactly.
sense.
It's one of those where it's the it's a great benefit, but at the same time, it's one of those where it's almost like a too little too late. Like the fact that you've already been under it, and you've already, well, obviously the level of controls that you have in place currently are, the underwriters have already been
But
comfortable with
they've
those.
been stated,
So
yeah.
the fact that they're offering this tool is kind of just like hey, look at, it's a market differentiator. Whereas having a partner ahead of time so that you don't even need to get to that point is obviously even more beneficial.
Yeah, no, that makes total sense. Everyone's looking for that value add, Cole. Everyone's looking for it, as you well know. And one of the other parts that I like to talk about, just because it's such a vast amount of data broadly. So Blumira is an organization. There are about 15,000 organizations on our platform. Microsoft 365 is used by 92% of the organizations on Blumira. It is heavily used. I'm sure most people watching this use Microsoft 365. There's still some Google out there. We're a Google shop. They're out there, but most people are on Microsoft 365 these days, especially post-COVID. You saw that kind of move from on-prem to, oh, we need to figure out how to get into 365 because at least people understand that, to now we are fully in 365. And one of the interesting parts for us from a security perspective is the amount of data from an operational perspective, just as much from a security perspective that you can get out of your, Office side, Microsoft 365 Exchange logs, your SharePoint logs. And when it comes to that insurance side, or kind of we were just talking about, what kind of files are people sharing? What kind of things are people storing? Are they sharing files publicly? Do you have malware sitting in there? Just as much as looking back at your Sentinel-1 logs, your actual Windows logs, and saying, all right, from a compliance perspective, are we collecting the right things out of these environments? Because compliance is always the most fun part of everything we do. That's very sarcastic, but it is a thing that we have to do. So let's take a little step back and talk more about, what is XDR versus EDR versus SIM? Like why does this industry keep creating new acronyms that no one asked for? So there's something wrong with us. It's probably the best way to put that. XDR, for those of you who don't know, was created by Palo Alto in 2018 by their CTO. Because they wanted to build a platform. That was their goal. They had a whole bunch of products and they realized, well, you know what, we could sell these for more as one product. And therefore XDR was born. The idea of XDR was fair though, like making sure that we can pull all of our logs together in one view, especially from a cyber insurance risk perspective, like makes sense. Let's get everything under one umbrella and really focus on where we're going from the perspective of, our environments. And the reason I like to call this out is because over the last, I would say 6 to 12 months, we continue to see more of a push on the EDR side for cyber insurance, especially. Well, you need to have telemetry, you need to have that coverage, you need to have something collecting that data. And I'd be interested, Cole, from your perspective, and I realize I'm like throwing a bunch of stuff out there, so I apologize. From your perspective, when you think about like underwriting and how you're approaching this within the cyber insurance world, is there a specific technology you're looking for, or are you looking for application of technologies in that environment?
I think the second one there is almost like the application of being, the application of technologies within your environment to safeguard whatever it might be. Obviously, that could later on down the line result in that kind of breach or leak or whatever it might be that obviously results in that cyber claim.
Gotcha. Okay. And that makes total sense, right? How you are applying technology is the most important part of purchasing technology. I just had a conversation earlier today that essentially amounted to that exact thing of, hey, we can buy this thing. And the question was, does anyone exist to make that thing work? And it was like, well, so it's important, especially in cybersecurity. We know from like Verizon DBIR and a variety of other polls that people feel like they're more secure when they have more tools. However, as cyber insurers know, and a lot of us know in the industry, having more tools doesn't make you better. It makes you have more tools. So it's really important to think about, what are you getting out of the tools that you're leveraging in security? How is that applying to your risk? How's that applying to your future cyber insurance costs, as well as, continuing to kind of bring that to bear? And what platforms are really going to help you solve your problems and the shape that your organization is? I will always put out there that, the concept of MDR, how that fits across EDR, SIEM, and XDR, they get muddled really quickly. The way that I kind of like to position this is, what is important to your organization, and what can you bring to bear as an organization to solve those problems? An MDR that is completely detached from your environment may not bring as much value as your two IT people having a tool that they could bring to bear to secure their environment. So think about, what exists in your environment and how you can best kind of make things work for them. And, a lot of that has to do with compliance, right? We can't get away from compliance. It's never going to go away. Cyber insurance has kind of taken up the torch of applying compliance in a forceful way, I would say. Not a bad way, forceful. Forceful isn't always bad, I think. And I'd be interested, Cole, like as you've seen the industry evolve, and you see some compliance regimes like PCI, which used to feel like it had teeth, or HIPAA, they just kind of have fallen to the wayside, and now cyber insurance takes that torch. Is that something that's comfortable for cyber insurers to have that torch?
So not wanting to speak for any of the markets,
Yeah,
individually, definitely
yeah.
say that what we have seen specifically over the last few years as well is, whereas it used to be kind of any industry-wide, industry accepted application, when we as brokers kind of going out to the markets representing a new client, shopping around for different options, looking for the most comprehensive coverage terms, whatever it might be. Whereas it used to be kind of, okay, you have an application in hand and you can pretty much reach out to 10,
Mm,
12, 20 different carriers. Now what we're really seeing, like you said, is each individual carrier kind of picking up that torch of wanting to be their own regulator, and
yep,
basically not necessarily even regulating the industry, but regulating their book of business. And the only way that they do that by onboarding is by, in their minds, requiring all of these addendums, supplemental, applications, a ransomware application, industry specific forms, things along those lines, that they're essentially saying, okay, well, we're happy to offer coverage, but you need to meet all of our, check the box requirements in order for us to even consider coverage. And so, I think they're pretty comfortable in asserting that, or to picking up that torch and kind of carrying it in terms of at least regulating their own books of business. And I will definitely say there are certain carriers that kind of, once they set a standard or require something new, the rest of the industry does definitely fall in line. I don't need to call anybody out, but it's definitely
yeah.
something we've seen happen time over time, or time and time again over the last few years.
Yeah, it's been interesting to watch the change over the last few years that, probably started 2016, 2017, and over the last 5 to 8 years has been a pretty significant, like 2012, you never talked about cyber insurance, talked about business liability and where it landed, but you never really sat down and were like, better figure that out. And especially was not the questionnaires that we were seeing today. So yeah, very, not a bad thing, but a very interesting change in the market, especially. It'll be interesting to see as CMMC picks up and how we see this all kind of flow across. But yes, very, very interesting. And kind of exactly to Cole's point, the questionnaires, what you're asked, how you're running your business, having stuff in place to answer those questionnaires, feeling like you can answer them honestly, always important. As someone who's filled out a ton of questionnaires, they are not fun. But it's important to kind of think about how your compliance needs overlap with those as well, which is to say, we've seen a number of cyber insurance questionnaires. I don't necessarily call it a SIM, but you have PCI compliance, or you have CMMC compliance, or you have CGIS compliance, and you have these compliance regimes that are saying you must do this, and your cyber insurance doesn't necessarily say that. And it's important to mostly just saying out loud, like, sometimes cyber insurance questionnaires don't have the end all be all of how to get there. Right, Cole? So there is still that additional work, I think is probably the best way to put that.
100%. Because like we said, at the end of the day, what they're trying to do is build a essentially from an insurance perspective, profitable book of business. So all they're going to do is require the controls in place that they do, what the loss history they've seen across the industry. They're going to say, okay, here are the claims that we've been seeing across our book. We just want X controls in place, which is why you do see those kind of vary from carrier to carrier. So trying to read between the lines and see which ones are, kind of the commonalities between all of them is definitely where, again, a partnership like, Blumira and Founder Shield does definitely kind of help read between those lines.
For sure. Yes. Yeah, that makes a lot of sense. I mean, you're always obviously always going to hear us at Blumira say SIMs are important, but it's really what works best for your organization in the grand scheme of it all, and making sure that you align with, like, these days, having cyber insurance coverage, making sure that you get what you get to, which we're going to talk a lot more about here in a second, on the Founder Shield side. The other area that I want to touch on just real quick. We help with a number of different areas in the cyber insurance side from a Blumira perspective. I'm not going to harp too much on that, just because I know it's only so interesting for people. But the way that I like to look at this really is that Blumira has been built to support whatever sort of compliance or cyber insurance requirements are needed for you, from the standpoint of threat detection, pulling that data in, giving you that visibility, having long-term retention if needed. We can go well over a year if need be. We have some people see just up to 7 years, and that's just very, very, like, the government has just destroyed their lives at this point, as far as I can tell in regard to that. And ensuring that you can really get that good quality EDR type detection and monitoring out of your environments with isolation, containment, and protection. And really all that just kind of falls into, like, there are only so many ways to stop ransomware and stop attackers. It's important to have that coverage across your environment, making sure you're meeting compliance, making sure you get the visibility you need. Otherwise, you get into that really crappy part at the end where there's something bad happens. You have to work through that, and that's not fun. We've worked with a lot of organizations on their SOC 2 Type 2, which is also a really fun one. But broadly, we look at cyber insurance as kind of the pushing force for a lot of SMB and small enterprise at this point, especially in the PCI, the moderate NIST, HIPPOs of the world, of, like, how can we make ourselves all better? Cyber insurance has done a really good job, like, continuing to push on that. And I already talked about most of this. I'm not going to talk about this. Blumira is, we're a managed platform that makes it so it's easy for you to do it. I think probably the most important part when it comes to this conversation, though, is that we align with the kind of needs that you're going to see in this part of the section, which is cyber insurance is not going away. It's really important to all of us from a business owner perspective, as well as from a business leadership perspective. You have to be covered. And Founder Shield has done a great job of positioning their program to work best for everyone. So I'm going to get off my Blumira soapbox and give Cole the microphone, to adjacent microphone, whatever, to talk about Founder Shield.
I appreciate it, Matt. And actually, I think that was kind of the perfect lead in, showing kind of the capabilities, ahead of time to actually position yourself as favorably as possible. So we never actually have to look at this slide, which is obviously what happens if, all else fails and, needing to fall back on something like a cyber policy. And even when that does happen, okay, well, there still is that backup remediation, all those different things that need to occur even after some kind of incident does happen. And that's when having a partner, obviously, in place that you can trust to kind of handle it. So again, you can rest easy at night is obviously that should be kind of top of the priority list. Maybe not top of the budget list, but top of the priority list, for sure. So I think just in terms of, obviously, seeing as the title of the webinar today is focused around protection without breaking the bank, we can definitely offer some insight into kind of the current trends we've been seeing in the marketplace, and then dive into kind of how best to navigate those and position yourselves with partners like Blumira to make sure that you guys are, obviously, anyone on this call, regardless of industry vertical, is hopefully walking into a discussion, whether it's with their current cyber carrier talking about renewals, or whether it's shopping in the marketplace for replacement coverage or a new program, obviously coming with as many tools in your belt as possible so that you can kind of knock those questions out of the ballpark and not have to worry about kind of leaving a box unchecked. So, obviously we don't need to walk through, every single one of these, but I guess at a high level, overall claims frequency, especially year over year, is up 13%. Again, not nearly as high as it was in 2021, obviously with the rise of the remote work and the COVID world of work from home. But frequency definitely increased, as well as severity of each individual claim. That being said, severity was only up 10%, so not quite as much as the frequency. But that being said, the average loss amount was around 100K, primarily due to a surge of ransomware kind of in the first half of the year last year. So interesting kind of fluctuations we've been seeing. But the interesting, like I said, part of it was, and the latter half of last year, ransomware severity did drop 54%. So it's kind of that ebb and flow, that the cyber insurers obviously like to see, because as soon as that severity gets to go down, they can kind of reorient their books and kind of look to adjust premiums on a go forward basis, which usually from the insurer to the client side allows you guys to obviously take a step back and reevaluate your programs as well and say, okay, well, where do we need to do we need to look to replace this on a go forward basis? So from a claims perspective, definitely a lot of activity, and even more reason to obviously have coverage in place, as well as have partners in place to help remediate that. Now, from the current kind of pricing landscape or market landscape, aside from the claims of the last year, so from pricing trends, as you can see on the slide here, just towards the end of the summer here, almost 40% of buyers are currently seeing an increase in premiums. Now, granted, only by a few points, but the average pricing we've seen kind of in the last month or two has fluctuated anywhere from that 2K to 6K, per million in coverage limits. And again, that's just kind of a blanket baseline premium, not industry specific as well. That doesn't necessarily take into account adverse underwriting factors such as missing controls or, previous loss history, as well as, again, does fluctuate as well for things like healthcare, utility providers, fintech, things that are, we'd call them higher exposure industry verticals. So I'd be interested to hear as well, Matt, on your guys' end, in terms of helping clients kind of prepare for these renewal conversations when they're, kind of walking in the door for these. Have you seen any, well, I'm sure there've been quite a few kind of difficult rate conversations having to be had, or no? Is it more just on the control side of things?
To an extent, there's definitely some on the side of rates. I mean, the interesting part from our side is, building relationships with people who have previous loss history. Maybe it was a different regime, and not necessarily the people we're talking to, that when they're going into that cyber insurance conversation, the prices are unexpected just because there's a history. That history hasn't necessarily been fixed, kind of what we were just talking about before. Most people don't have such a big team to bring to bear that they have now said, like, all right, everything is perfect now. It's that, security maturity is a growth curve, and it's hard to go from problem, new people, fixed everything, magically now everything is great now. Like it is that curve of maturity, and it's really more of a, you have to get into the curve to get to the growth, and generally speaking, and that just takes time. It takes time, it takes technology, it takes people. And in a lot of these cases, to your point that you made about the different verticals, a lot of them are, in that healthcare adjacent space, fintech as well, often fintech near healthcare, like we saw in the breaches this last year, like with Change Healthcare, where there's just a lot of potential target, a lot of value inside of that data. And, it makes it harder to, I think, quantify the, like, well, if I'm spending this and it saves that on cyber insurance, and I get to this point, Like, when is the break even here? And I think it creates this really interesting flywheel where one of two things happen. And I mean this in the nicest way possible, the vendors I'm about to reference. One of the two things happen. You look at a list of requirements and you go, all right, how do I complete this list of requirements and check the box legitimately, to your point, Cole? Like, how do I check this box? But how do I check this box with this tiny little budget I have associated with it? And you end up dropping in vendors that maybe weren't the best choice for you in the case of like, well, I need an EDR. I'm going to find the one that says they have EDR. That's the cheapest one. I'm going to put that in there because that's all the money I have. Like, this is all I have. And that can result in situations where, they didn't necessarily get to the growth and maturity they would have wanted to because of that. However, this is really more, I think, back to the story of security maturity as a whole. And depending on where you are in that journey as an organization, your cyber insurance gets impacted by that journey. Like, it is just an inevitability that as your maturity grows and gets better, you will not be one of those people that's cost goes up. But it's also hard and expensive, and it costs people to get in that journey as well. So it's definitely an interesting like back and forth from our perspective of like, yeah, like we agree, MFA should be everywhere. Like, please put MFA everywhere by all means. And the interesting parts really tend to be like email filtering solutions is a really interesting one for us because like we support Mimecast. One of the reasons that we did a Mimecast integration was because our customers kept telling us Mimecast was too loud and they couldn't get any value out of it. So like, could you just tell us the stuff is important? So that's why we built the Mimecast integration. So it's like, when I look at this, I think, and when I talk to my customers, I think, what's the best way to get the rate that makes sense for you and that you can actually like get value out of the things that you're putting money into and not just like, yep, technically the box is checked, because if the box is just checked and you still have a problem, your rate's just going to go up again
As
looking
soon
into
as that claim occurs. Exactly.
yeah, exactly. Yep. I could talk forever, Cole. It's a problem. So I'll stop there.
No, I'm with you. I'm with you there. So I mean, I think you just put it perfectly in the sense that it's that fine balance between, making sure the vendors are in place to
Yeah.
actually have those controls, but also balance the runway or budget that any specific client might have. Because like we said, early on, a lot of people wear a lot of hats. And so you want to make sure that you're balancing that because yes, you could put any XYZ vendor into a control that you need, like whether it's EDR or something like that. And then as a result, a claim happens and they might not have been the right vendor. And then either way, you're seeing an increase next year. Even though you had the control in place, you still had a loss because of it. So I think
Yep.
it's, again, it's trying to choose the right partnerships as well as kind of making sure those controls are in place.
And I have a slightly weird question for you, Cole. And since you work with founders and you work with people building up businesses, how do you deal? And I've talked to a few founders in the healthcare space, especially, that when I hear how they handle like PHI, I'm like, this is a crazy thing. Please stop talking to me about what you just said. How, from a cyber insurance perspective, I would imagine you run into those types of things every once in a while. And is that a pushback to HIPAA, or is that kind of like a rate change, or how does that impact from the cyber insurance side as those things come up and it's like, you have not yet started that journey into maturity?
Yeah, I think it's definitely one of those where, especially again, kind of with the rise of remote work and work from home, as
Yeah.
soon as this huge balloon or bubble of telehealth, virtual care, organizations kind of came to bear. There's definitely a lot of that where people are just. I could be sitting in my home as a care provider, offering some level of some patient visit, and all of a sudden, I could be in Starbucks, I could be in my office, I could be at a bus stop, right? And so it's one of those where the protections for PHI, in an actual physical or location sense, as well as the PHI now being on hundreds of endpoints on users fully remote at home, things along those lines. There's a lot of from a cyber insurance perspective, they definitely want to make sure that people have or are as buttoned up as possible when it comes to, okay, well, if you are handling that, your early stage, what's in place? So your rates are going to be higher early on because you do present that kind of higher risk factor when it comes to handling the PHI, as opposed to someone who might be farther along that journey to maturity or that kind of that journey to scale where they have they do have enough budget and enough team members or headcount to be able to adequately put controls in place.
Yeah, that makes total sense. I have one on the top of my head that they were carrying just briefcases of hard drives full of DNA data around. And I was like, this seems like not the right way to do this, guys, but
Absolutely. That we're sending things in the mail that absolutely shouldn't have been mailed. They're like, oh, because patients are now remote, we're just kind of sending things, you know, whether it's certain prescriptions or it's an at-home administration. And it's, well, why are that you're telling me you're sitting there on a Zoom call watching them administer this to themselves? Because that doesn't seem sterile or safe. So, you know, definitely an interesting healthcare has definitely seen raised a few eyebrows, definitely from
COVID had a weird impact on some of that side of healthcare for sure. Right, there we go. Next slide, anatomy of a cyber policy, which I really like the image you have here.
Yeah, well, speaking of healthcare, it's a perfect kind of segue here. We got the doctor's office diagram. But that being said, really easy way to break down cyber policies. Now, again, for those of you on the call, I'm sure some of you already have kind of a pretty built out, cyber liability program. Others might be, again, just starting to look into it. But either way, it never hurts to do a quick kind of high level here. So again, when we go out to market, and whether it's remarketing your program or looking for that first time buy, a few things to think of, or, you know, an easiest way to break it down is you do have both first party and third party kind of protections within your cyber liability policy. When it comes to third party losses, think about suits levied against you guys as a downstream result of a cyber incident. So it might be a client suing for leaking or mishandling of their, you know, PII or PHI, like we were just talking about in that recent example. And so from a network security and privacy liability perspective, think suits arising from transmission of malware to that third-party system, or failing to prevent that customer data leak. And then media liability as well is more along the lines of, think a third-party suit arising out of like defamation, libel, slander, or infringement upon IP rights arising out of your content, your online content. So that's kind of like the third-party side of the cyber liability coin, stepping up to defend you and pay out, whether it's remediation efforts or actual damages and losses to that third party as a result of that cyber incident. So that's the third party side of it. And then on the next slide, we jump into the first party side of the coin, which essentially is just like it sounds. It's actually internal remediations or coverages for financial loss arising from the event for you guys specifically. So could be anything from unauthorized system access, again, an attack, ransomware, data privacy breach, or system downtime, which downtime insurance has definitely seen, and I'm sure everyone has top of mind the recent CrowdStrike Microsoft incident in their head. So we can definitely talk about that, because there has been, over the last year and a half or so, a pretty fantastic advent of a new type of coverage known as cloud outage or downtime insurance. And so it's a nice stopgap for this first party cyber coverage, because these first party coverages do usually have not only a financial deductible, but also like a time deductible, you know, a certain amount of hours, usually called a waiting period, where usually, I think the standard in the industry right now is just about 8 hours. Sometimes on renewals, if you twist the knife hard enough, you can get it down a little bit. Sometimes they come in even higher at 12 hours, something like that. But the downtime that we can talk about in a few minutes, or downtime coverage, actually helps shorten that window and actually offers some pretty fantastic benefits elsewhere. But in terms of the first party, easiest way to think about it is three main buckets. Your incident response boils down to all the costs involved in responding to a cyber incident in real time, such as IT security and forensic, specialist support, or reaching out for legal advice. And, how do we, notify all these individuals or clients who were now involved in the breach as a result of this data being impacted. So that's that incident response bucket. Then we have system and damage and business interruption, which covers the costs for your guys' data and applications to be kind of, whether it's repaired, restored, recreated in the event that systems are damaged, and then reimburses you guys for the loss of actual profits and increased cost of working as a result of that business interruption. And so that's where that downtime coverage also kind of offers an additional benefit as well. And then lastly, that third bucket is cybercrime. We saw it on the last slide as well. I believe it was the head of the diagram there, but just think theft of funds usually happens in one of three ways, whether it's that ransomware, extortion, system compromise, or social engineering. And all that really comes down to is, you can have as much software and as many controls in place as you can possibly afford or have the time to implement. But when it really comes down to is making sure that all employees are adequately trained on phishing and making sure that they're not clicking links, because the vast majority of incidents kick off with someone clicking something or opening something they shouldn't. So
Very much so. Yes, I think Verizon DBR this year had, I think it was over 50% were started by humans, not on purpose most of the time, but nonetheless.
Yeah, well, I guess, hey, if you want a day off work, feel free to click that link, and take the rest of the day off with everything, down. But that being said, leaving us to downtime insurance here,
Yeah.
actually, so perfect segue as well. But so downtime coverage, I already kind of hinted at it just a moment ago, but essentially, it's kind of like the new kid in class. It's only been around the last few years. Benefit of the coverage is that, again, like we talked about, while normal cyber policies do have that waiting period or that time deductible of around 8 hours. Usually, downtime insurance kicks off at 2 hours or steps in at 2 hours. So a few of the new carriers in the marketplace saw that white space and said, okay, we're going to carve out this niche. And basically, we are only offering coverage from the 2 hour mark when there's downtime to when that downtime or incident cloud outage occurs to that 8 hour mark when your full cyber policy actually kicks in. So it's this nice little stopgap or parametric coverage. Parametric obviously just meaning that the second a predetermined event triggers it. So let's say you guys are operating in, 4 different cloud zones or regions with 3 or 4 different cloud providers. However many of them are affected by that outage, there's a predetermined limit that actually immediately gets paid out per hour. And so it's pretty great because we have some clients, actually one in the healthcare space. We were helping through the recent CrowdStrike or Microsoft outage where it was 100K per hour for those 6 hours.
Okay.
And the good news is they can use it for whatever they want, whether that's paying, paying customers to actually, for customer retention reasons, or actual internal remediation efforts to get things back up and running. So it's kind of like, I don't want to say blank check, but it's not like your standard cyber policy where whatever limits they're paying you in terms of coverage, it's for a specific purpose. It's more along the lines of, if you have that outage, you're experiencing downtime, here's this hour by hour check that you can use to keep the business up and running as if it were normal. So
interesting. So would you recommend that people move more toward downtime insurance that rather than negotiating that deductible down on renewal? How do you look at kind of delta there?
So the good news is I would always say at your first step would be at renewal to say, hey, how low can we get this? I will say in 95% of circumstances or scenarios, you're probably going to see the carriers kind of hold firm and say, look, this is as low as we go. This is kind of our minimum deductible is, or time trigger there is an 8 hour waiting period. And so that's when, the next step would be to go to that cloud outage or downtime coverage. And I will say it's been a shocking increase ever since, the CloudStrike event a few weeks ago, where now most of the requests that we're getting on the cyber front, if it's not a renewal client, a lot of them are just saying, hey, I have this cyber coverage. Can you guys, give it a quick once over, see if I'm, benchmarked against the peers in my industry, but also I want to make sure I have the downtime coverage going forward. So I think that's really going to be the biggest conversation going forward, because, anytime an event happens, it's usually top of mind for the next month or two. And then it kind of falls out of grace a little bit. And then people wait until something else happens again. And then the conversation rears its head. So
yeah. I mean, our attention span is only so long, Cole. It's
right,
only
exactly.
that makes a ton of sense. And yeah, like Blue Mirror is a cloud business. I'm sure a lot of you listening also are primarily on the cloud, if not fully on the cloud. And yeah, I think a lot of us, especially watching the CrowdStrike and related outage associated was one of those like, ooh, this is not the best thing that's happening right now. So that makes a lot of sense, especially to negotiate there in the middle. And we'll take it on then next to underwriting approach.
Yeah, absolutely. So from an underwriting approach, we've kind of already, again, hit on a lot of the big ones at this point, whether it's from a controls perspective or having those right partnerships in place. And right partnerships might not necessarily mean just a vendor to check the box, but make sure that you actually have someone that you can trust in the event of a claim scenario, because obviously that's what you're paying them for. So when it comes to setting your guys, yourselves up for success, again, whether it's at that cyber renewal or purchasing that first time policy, or even midterm going to amend something, right? Like if you're reopening the conversation, via your broker with your cyber insurance carrier and saying, hey guys, we have this new, RFP or contract we're looking to land. It's an enterprise contract. So the limit requirements are higher at something like 5 or 10 million as opposed to the 1 million we currently have, right? Obviously, if it's midterm, the underwriters aren't necessarily going to say, all right, we need to completely re-underwrite this. But what they are going to say is, okay, let's look at the contract. Are they requiring anything else that they want to have or see in place as a result of increasing the program? And that's when they're usually going to then hit you with the 1-2 combo, which is the additional premium, as a result of increasing that limit. But when it comes to, positioning yourselves as favorably as possible. Whereas, directors and officers or, some of the other coverages are more straightforward from an underwriting perspective where, okay, make sure all major shareholders with more than 10% stake have a board seat to avoid claims. And, can you evidence enough sustainable runway for the next 12 to 18 months? What does the financial health of the business look like, right? So that's pretty cut and dry. It either is or it isn't. Whereas cyber is a little bit more nuanced because they do look at, regardless of industry vertical, each individual, set of controls for, okay, well, obviously the same regulatory frameworks that you're going to need to comply with for a fintech company is definitely going to be different than someone in health tech. Or if you're a vanilla, SaaS provider, then obviously you might not be subject to any of those. And so your cyber renewal process might be a breeze. And from a from a controls perspective, they might not be too concerned if you are, handling something where it's just email addresses and users for like something like a marketing SaaS play. So I think, the key to going into each renewal conversation is truly thinking, okay, what regulatory frameworks are we having to abide by, and what controls, have been seen in terms of the industry that have caused most recent losses, something like obviously MFA or that email filtering, or what does the backup or patching cadence policy look like? So, if a stark amount of claims over the last year, as my past employer Chubb recently released just yesterday a note saying or findings that 50% of the client base takes longer than 55 days to remediate, crucial patches. And it's one of those where obviously, especially when it comes to having that bandwidth or that time or funds to actually, have a headcount available to make sure that patches, are installed on a as need be cadence. Once you have that in place, it pretty much takes care of itself, and you can solve that potential claim scenario right off the bat. So it's one of those where something like that, as well as like we talked about it, to bring the human element into it as well, with having actual training for employees. And now, again, I'm actually, Matt, that's a good question for you guys. Do you offer kind of those employee training consults as well, or would that be a different vendor?
That would generally be a different vendor, but that's one of those areas that we like to work with people on. So like we integrate with Know-Before and a variety of other vendors that leverage that kind of training. That's also an area that like our solution architects would work with you to say like, hey, how are you approaching this? How can we help you approach this? And I think to Cole's point, like phishing training and security awareness training is really more about short, repetitive training sessions, more so than it is like, once a quarter, we're going to sit down for 6 hours and talk about how to be secure. So like you don't have to boil the ocean. You just have to make sure people are aware so people can apply what they've learned in ways that they can continuously bring up. And we always love to see more education as much as possible from the user perspective. We look at it from the perspective of, if everyone is part of the security maturity curve, then everyone gets better. And if people aren't getting owned at their house, that's just as good if they aren't getting owned at the business as well. If we can all get better, that's not a bad thing. And I do want to ask you something, because you mentioned culture, and this is something that I've seen over the last few years in the industry. And I'd be interested in your opinion. I think that people need to be closer to their cyber insurer, especially post-signing, which is to say, if you do get breached and you do need to make a claim, you will not be in the best mindset to make that claim unless you really kind of know the people associated with it. So it's important to really kind of drive through it and say like, all right, if something does happen, I want to know who to call. I want to know what IR they expect me to use. And you kind of have to know it all. And Cole, from your perspective, how many people are really close to you and their cyber insurer and maybe should be closer?
So it's a good question because oftentimes, Founder Shield having as a, in a risk management advisory firm and a brokerage, full service brokerage, we do have, an in-house claims team. So this, we usually say to clients, because we're working, with them kind of hand in hand on most of their renewals, whether it's their cyber renewal in May or their D&O in the fall or their GL in the winter, regardless of kind of those timelines, we, do feel like we're usually pretty close from a brokerage perspective because we're advising on new contracts that come through and things like that. But then as soon as something like, an actual incident does occur, we usually obviously loop in our claims team as well as trying to get in touch with whatever the cyber insurance carrier might be on that. Now, I will say, like we talked about earlier in the session, that a lot of carriers are trying to create these new kind of portals with scanning tools and monitoring tools and things like that. And I think that's their kind of shift. They're realizing that, okay, well, now that, the meeting with your, broker and your insurer at lunch or something like that isn't necessarily in the remote world all that possible when you have someone in Sedona and someone in Boston or something like that. And so now it's more along the lines of, all right, well, how do we create this portal and create this connectivity where, people can be in touch with both their broker as well as their cyber insurer as quickly as possible.
That makes a ton of sense. And yeah, that for the best for the industry in the grand scheme of it all. I suppose we can't all go out to lunch with our insurers anymore because it's not 1978, but maybe one day we'll see.
I will say napkin binders are still a thing. If we've seen them at conferences recently, so it's definitely still happening. If anybody wants to go to lunch, you should reach out because usually anyone in the any one of us is trying to get out of the office. So that being said, don't hesitate to ask.
All right.
Well, I jumped back in here because I know we're getting close to time and I wanted to make sure that we had time for a few questions. And thank you, Cole and Matt. I definitely learned a lot. And I've seen a couple of questions come over. Awesome. Thank you. So for everybody, as we're getting into questions, we've got Try Blumira, Try Founder Shield. I have heard that there are special pricing, that special pricing is available for Blumira and Founder Shield right now. So please, when you reach out, let us know if you're interested in that. Of course, with Blumira, you can even try it out for free without ever talking to anybody. But I will tell you that the people who work on our sales side and our customer success side are super cool, and you would enjoy talking to them anyways. So up to you. Okay, a couple of questions here.
Sure.
And you were talking about this to a degree, Matt, with the acronyms earlier, but is it less risky to contract out MDR than to use another tool like Blumira or something else?
Yeah. So it depends is always going to be the answer in security, because well, not in insurance. I mean, yes, insurance doesn't say it depends super often. But in security, it's going to depend a lot on your organization, what your goals are, and kind of what we've been talking about today. What does your security maturity look like over time? What we have learned here at Blumira and what I've learned in this industry over the last however the hell long I've been in this industry, is that, MDRs can be really, really helpful for organizations. What we have seen though is that MDRs tend to not focus on compliance. They tend to focus on specific response associated with whatever their purview is inside of that MDR. So as you're working with your kind of specific MDRs that are out there, think about what your true compliance visibility needs are. Think about what you need to get out of your data that's not just that kind of like base level threat detection insights into your environment, because that's the MDR is doing. They're looking at your data to respond to those threats. And ensure that you are meeting your compliance at the same time as you're meeting your needs for detection. And kind of the most important thing of all, ensure that you are bringing your team up. Kind of the big topic that we've had today is, cyber insurance is only going to get, we'll say, cheaper if you have a team and you have people that have built things. Now, I don't mean a big team, but a team that has built things, put things in place. They have it functional, they've executed on it. and they have proof, especially if you're SOC 2 Type 2, they have proof that they have done that work. And one of the things that we have seen over time is that MDR sometimes can push that responsibility away from an organization. And when that happens, you can sometimes lose the forest for the trees when it comes to security maturity. So it's important to think about where you are as a company, where you're going as a company, and what does your security maturity look like? Because growth is always the goal in security maturity. And that always requires this persistent internal effort to think about it from a cultural perspective.
Great, thank you. And I know we are at 11:57, giving away my time zone here. I already told you I'm in Sedona. So I don't see any other questions. I have one here for Cole, but I want to give the two of you an opportunity to close up just because I think we're going to lose people before they need to go to their next meeting. Any closing thoughts from either one of you that you'd like to offer?
I'll go first, then Cole, you can wrap it
Go
up.
for it. Absolutely, Matt.
All right. I'm not going to say anything more than what Kim said because she already said how great Blumira is, and so are the people here. If you're interested in trying out Blumira, SIEM, XDR, EDR, whatever tickles your fancy, by all means, please leverage Blumira to try out for free. And most importantly, and I'm just about to pass to Cole, work with organizations like Founders Shield that are really looking at ways to really make your life easier, just like Blumira is as well. And with that, I will leave it to Cole.
Appreciate it. And yeah, I mean, just to wrap up, if any of you on the call here have any questions, again, whether it's about new coverage or you and the team are coming up to renewal and just looking into having your current coverage evaluated or benchmarked against peers in the industry to see, if the limits or what you guys are paying are actually fair, fair rates, please feel free to reach out and schedule a risk consult. Always happy to connect and see if you guys are on the right track. And if not, we can definitely set you guys on the right track. So that's what we're here for as a holistic risk management, provider and, partner for you guys, whether it's reviewing a contract or helping with renewal.
Awesome. Thank you both so much. And thank you to our audience who joined us today. The recording of this webinar will be sent out within the next 48 hours.
Yes.
Thank
Thank
you
so much, Cam. Appreciate everything.
Yeah. Have a great day, everyone.